Ladies and gentlemen, good day, and welcome to the Q1 FY25 results conference call of Sky Industries Limited, hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ganesh Nalavde from Kirin Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. On behalf of Kirin Advisors, I welcome you all to the conference call of Sky Industries Limited. From management team, we have Mr. Michael Ravrani, Full-time Director and Chief Financial Officer, and Ms. Priya Ruparelia, Company Secretary. Now I hand over the call to Mr. Michael Ravrani. Over to you, sir.
Good afternoon, everybody. Thank you for joining us today for the Sky Industries Limited earnings con call for Q1 FY25. It's a pleasure to connect with you all as we discuss our financial performance and key milestones during this quarter. I would like to take this opportunity to provide a brief overview of our company's journey, our unwavering commitment to quality, and the strategic direction we are pursuing for the sustained growth. Since our inception in 1989, Sky Industries has grown into globally recognized player in hook and loop fastening solutions industry. Over past 30-35 years, we have built a strong reputation for delivering products not only to meet but often exceed the industry standards. Our commitment to excellence is reflected in our extensive global footprint, with our products reaching the markets in USA, UK, Germany, Turkey, Bangladesh, Sri Lanka, etc. We have a customer base of 800, and apart from the exports to these countries, we have other areas which are covered domestically as well. Our certifications include ISO, IATF, OCOTEX. Recently, GRS also was added as a testament to our rigorous quality standards and our commitment to sustainability and ethical manufacturing practices. Our product portfolio is diverse, catering to a wide array of industries, including footwear, orthopedics, PPE, automobile, garments, sportswear, packaging, home furnishing, aviation, defense, etc. Whether it's hook and loop tapes or self-adhesive, webbings, neoprene or velvet, we have consistently delivered solutions that meet varied demands of our clients. Our operational strength is bolstered by two state-of-art manufacturing facilities, one based in Navi Mumbai in TTC Industrial Area and another in Bhiwandi, both approximately spanning around 80,000 square feet. We have collective installed capacity of around 9 million meters per month for hook and loop products and 3 million meters for webbings, velvet, etc., which we believe are enough to cater for the current demand. But looking at expansion, we obviously have plans for expansion as well. We are particularly proud of our leadership role within the BIS committee, where we actively contribute to setting the standards for hook and loop tape fasteners in India. We are the only company in the country which is currently licensed by BIS to use its mark in this industry. In past, we have won highest export awards from SRTPC under the Ministry of Textiles, which underscore our commitment to excellence and our significant contribution to the industry. Looking ahead, Sky Industries Limited is well positioned for a continued growth and expansion, particularly within the narrow-woven fabric sector. We are actively pursuing new opportunities through strategic collaborations and innovative marketing arrangements, aiming to extend our market reach and capitalize on emerging business models. Innovation remains the cornerstone of our strategy. We are deeply committed to developing new products, not only to address the evolving needs of our diverse customer base, but also to align with global sustainability trends. Our focus on eco-friendly practices and materials is central to our mission of delivering high-quality products while making a positive impact on the environment. Margin enhancement is another critical priority. We are continuously optimizing our operations and refining our cost structures to boost profitability. This focus ensures that we maintain our strong financial performance, delivering consistent value to our stakeholders. In addition to our operational initiatives, we are exploring new investment opportunities that will drive our growth and create long-term value. By investing in cutting-edge technologies and expanding our manufacturing capabilities, we are strengthening our position as one of the leading players in the industry. With these strategic initiatives in place, we are confident in our ability to achieve sustainable growth, maintain our competitive edge, and continue delivering exceptional value to our customers and stakeholders. Talking about the operational highlights for this quarter, we participate in the prestigious Tech Textile 2024 business exhibition in Frankfurt, Germany. This global platform allowed us to showcase our latest trends and innovation in technical textiles, garnering significant interest from industry leaders worldwide and reinforcing our position as a leading player in this market. Over and above this, we have been upgraded in our credit rating by CRISIL. We have now been upgraded to BBB- stable for banking facilities, working capital facilities approximating around 18.3 crores. This reflects our financial stability and robust operational capabilities, positioning us well for our future growth. Commenting on the financial highlights of Q1 FY25, we are delighted to report the impressive financial results of Q1 FY25, showcasing the strength and resilience of Sky Industries Limited. Our strategic efforts and operational efficiencies have driven substantial growth across key financial metrics. For Q1 FY25, we recorded a total income of 22.57 crores, reflecting a significant year-on-year growth of 13.47. Our EBITDA of 2.80 crores represents an impressive year-on-year growth of 65%, with EBITDA margin improving marginally to 12.40%. The net profit for the quarter reached around 1.59 crores, again making an outstanding year-on-year growth of around 107%. The net profit margin rose to 7%. Earnings per share increased to 2.01 per share, demonstrating again a year-on-year growth of around 107%. For the standalone, our total income was 22.49 crores, marking a steady year-on-year growth of 13.08%. EBITDA increased by 70% to 2.88 crores. EBITDA margin improving marginally to 12.79, net profit standing at 1.66 crores, and the net profit margin improving to 7.37%. As we move forward, we remain committed to sustaining this growth trajectory by continuing to innovate, improve our operational efficiencies, and expanding our global footprint. We are confident in our ability to navigate the dynamic market landscape and deliver sustained value to our stakeholders. Before we delve into the question and answer session, I want to express my sincere gratitude to all our stakeholders for being an integral part of our growth journey. Your support and involvement have played a crucial role in our success, and we genuinely appreciate your valuable contribution. With this, I would like to open the floor for questions and answers. Thank you once again for your presence and continued support.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, if you wish to register for a question, please press star and 1. Our first question is from the line of Madhur Rathi from Countercyclical Investments. Please go ahead.
Good. Thank you for the opportunity. Sure, in your investor presentation, you have highlighted that we are the only BIS certified player in the hooks and loop industry, as well as we have been assigned by the committee. So you mentioned last quarter that this is a differentiating factor, but when can we see a timeline when the government will come up with BIS rules where that can help us majorly from the current scenario?
Okay. Madhur, yeah, as of now, we are basically holding the license, that is the IS license, what we popularly call as, which is from the BIS. But what you are probably referring is something called as a quality control order, which obviously is a very long drawn process. And that is up to the BIS whether they want to introduce. They have introduced in more than 6 to 700 products up till now, and including around hundreds of products in the technical textiles era. The timeline for that is little bit difficult to predict because it involves certain decision making from the government side. But safely we can say 1.5 to 2 years is something what you can look at such standards coming in.
So, we are a member and we have been assigned by the committee to make rules and regulations for this segment. So even then, 1.5 to 2 years is a
No, I'll explain you in more detail. See, we are not making the rules. We are just recommending the government. Rules are set by the government. There is a committee in BIS which sets the standards. We can just give them a recommendation. So we are in board of one committee which gives us recommendations. And as far as the quality standards implementation is concerned, it involves a lot of other stakeholders, including the law ministry, the WTO, etc. So obviously it takes little bit more time.
Okay, sir. And sir, what was the export percentage of the revenue for this quarter?
Exports were around, just give me exact figure, around 19%.
Okay, so there has been a jump from FY24's 15% to 19%.
Yes.
And sir,
Yeah.
is our export margin better than our domestic margin, or are they on the similar lines?
No, in exports we definitely have competition from China and Taiwan. So the margins are definitely a little bit depressed, but here we get more volumes as compared to the domestics.
Okay. Sir, thank you and congrats on the good performance. Thank you and all the best.
Thank you, Madhur.
Thank you. Our next question is from the line of Advika Sharma from Connected Consultancy. Please go ahead.
Hello. My question is, what's the working capital cycle, and if we have seen any improvement in the Q1 FY25?
Yeah, the average working capital cycle is around 2.5 to 3 months. There would be a very marginal improvement in the working capital cycle, but of course, our utilization of our cash credit limits is much lower as compared to the previous quarter.
Okay, sir. And what are your future growth strategies?
Yeah, ma'am, we'll be obviously wanting to consolidate in our basically bread and butter segment, that is hook and loop, wherein we would like to give more offerings in terms of variety of hook and loop tape fasteners.
Okay, sir. And any organized player in this segment?
Sorry, I couldn't get your question.
Any organized players in this segment?
Yeah. There are a couple of players. Couple of them are based in Delhi, and one of them is based in Palghar.
Okay. And what is the size of opportunity you expect for the next 2 to 5 years? And how are we positioned to gather major business from emerging opportunities?
Yeah, the major opportunity looks to come from the export segment, and next in the domestic defense and other segments hold a good promise. And as far as how we are in position, in my past also we have already mentioned that we are looking for a new facility wherein we will be expanding our operations. So presently, though, we are enough capacity to cater to the present demand, but the future, whatever growth or demand is there that we have to cater to an increased capacity. So the process is on as of now, and maybe in 1 or 2 quarters, we'll get to know more firm about the expansion plans.
Okay, sir. Okay. I had these many questions only. Thank you for answering. If I have any more, I'll get into the queue again. Thank you.
Sure. Thanks, Arpita.
Thank you. The next question is from the line of Aditi Roy, who's an individual investor. Please go ahead.
Congratulations, sir, and thank you. What is our order book? Do we get order for full year or it is periodic?
Ma'am, my order book is usually less than a month because we are in an accessory industry. It is like a button for a shirt. For wanting to make a shirt, the shirt manufacturer will not wait for the button to come in. He'll not order and keep it for a longer time. So obviously my order book is less than a month because the bigger the order book is not a very healthy sign for us.
Okay, sir. And my next question is, any acquisition or merger on cards?
Ma'am, as of now, there is nothing of that sort on cards.
Okay, sir. And my next question is business scalable? What contributes scalability and risk to the business growth?
Yeah, madam, the scalability obviously is there, and the driver for scaling up obviously will be coming from export segment.
Okay, sir. And what is our capex requirement for next 2 years? Where it would be deployed and how funding will be made?
See, as of now, the firm plans have not been made, but initially the capex, the first phase of the expansion would need a capex of around 30 crores, and that would be funded by internal accruals as well as debt initially. And then maybe we look at any other options for further expansion. But that depends again once the first phase is about to complete.
Okay, sir. Thank you, sir.
Thank you, Aditi.
Thank you. A reminder to all the participants, if you wish to register for questions, please press star and 1 on your touchtone phone. The next question is from the line of Vinod Gupta, who's an individual investor. Please go ahead.
Hello.
Yeah, Mr. Gupta.
Congratulations and thank you for giving me this opportunity, sir. Sir, my question is, can you elaborate more on your new business?
New business in our case comes with the new products, new product developments or new offerings in terms of different applications for different customer segments.
Sir, I want just what is the capacity, commitment of production client, and we are offering this product.
The capacities, as I mentioned, we are presently having a capacity of 9 million meters a month for open loop.
Okay, sir. And another question is, how has been respond to our newly launched fiberglass insect-free PVC coated mosquito net?
Fiberglass has been running product for us, and it is more of a traded item as of now, and the demand obviously it's a seasonal, slightly seasonal product as well. So the demand would be there definitely more during the monsoons or before the monsoons.
Okay, sir. And what is our top 10 or top 15 clients contributed to our revenue?
Top 10 would contribute to roughly 37% of the revenue.
And top 15?
Top 15, need to calculate, but it would be between 45 and 50%.
Okay, thank you.
Thank you. The next question is from the line of Yashwanti from Cogin Finvest. Please go ahead.
Thank you, sir, for the opportunity. Am I audible, sir?
Yes, ma'am. Please go ahead.
Yeah. So we have seen a very sharp increase in our EBITDA and EBITDA margin. But why our revenue is still growing in the range of around 3%? So one is why total income has not grown at a aggressive rate. secondly, what has contributed to our EBITDA margin to show such a stupendous increase in the EBITDA margin as well as the EBITDA margin expansion?
Okay, I'll answer your second question first. The margin EBITDA improvement is basically on account primarily for the product mix.
Okay.
Okay. And the reason for top line not going up substantially is basically this more of an accessory product. So obviously the turnovers will take a bigger push to move upwards, right? But with the product mix, we can definitely have a better bottom line.
Yeah, but in our earlier question, you said that our main business is based on the volume. So obviously, when the volume is growing, we should see that impact on the top line. Is my understanding correct, or if there is anything going on?
No, it depends definitely on volume, but at the same time, the product mix comes into play, madam.
Okay, what is your margin guidance going forward? Will it be maintained? Because in Q4, we are just seeing the 12.5% as against the overall of around 11%, 10.5%. We continued in the Q1 also. So, do you think the 12.5 can be maintained with upward bias?
I think we should be able to maintain the trend, madam.
So, any new client has been added?
Yeah, obviously certain new customers have been added, but obviously they would not be contributing very significantly initially. But yes, in export markets, definitely some new clients have been added and who have started to contribute significantly.
Next question is, what is our repeat business in terms of percentage? And we add any new client?
Madam, not able to hear your question very clearly. Can you please repeat?
Am I audible now?
Yeah, now it is better.
Am I audible now?
Yeah, now better.
Yeah. So one thing I wanted to understand is what is our repeat business in terms of the percentage, and secondly, whenever we add any new client to our client portfolio, normally how much time it does take to receive a big order or to get a repetitive order from them?
Again, this question can be answered in three stages. One is, in case of repeat business, we would be having around 80-85% as a repeat business from our customers. That is first question. Second,
Hello.
Export market. Yeah, can you hear me, madam? Madam, can you hear me clearly?
Am I audible, sir?
You are audible, but there is some noise, I think, in between. Yeah, so around 80-85% is a repeat business, and in export market, they take more time for us to get a substantial order vis-a-vis the domestic market.
I'm talking about once you get new clients into your client, normally how much time the client takes to settle and give you the repetitive order?
So that is what I answered, that in export market, the time taken would be around 5 to 6 months, and in domestic market, it will be much faster, so maybe within a month or so.
And so if I may ask you one more question, you recently participated in the exhibition which has been held in Germany. So what are your learnings from there, and has it helped us to add any global clients from this exhibition?
Yes, we were able to add certain clients, and again, there has been more inquiries from European customers as well. The basic learning is the more you are in touch with the customers, the better the chance of getting converted into the order, right?
That's right. You understand it, right?
Sorry to interrupt. Yashwanti ma'am, we are still not able to hear you. There is a lot of background noise coming from your line.
There is no background. I don't know how it is. I just wanted to understand any new product in pipeline?
No, as of now, the offerings are all related to hook and loop applications only. But again, different variants in terms of the different applications are in pipeline.
Oh, I'll come back. I'll join that in the future. Thank you so much, and wishing you the best for the rest.
Thank you very much. Thank you.
Thank you. The next question is from the line of Madhur Rathi from Countercyclical Investments. Please go ahead.
Yes, thank you for the opportunity again, sir. So this neoporin that you have highlighted, sir, is the revenue from this considered in hook and loop only, or is it a different product segment altogether?
No. As of now, neoprene is manufactured under Skytech Textiles Private Limited, which is a 100% subsidiary of the company. The revenue of that is recognized under that. Again, such products, it's a different product altogether, having a different application. But there are certain customers like orthopedic or other segments, equestrian and all, wherein this product is used along with hook and loop. So that way there is a commonality between the two.
Okay. And sir, what kind of revenue can we expect from this segment for maybe for FY25, and kind of growth we expect from this over the next 2 to 3 years? As well as, sir, will the margin profile be better than our 10 to 11% core business, or it will be on a similar range?
Margin profile would be better, and the expectation is definitely to the tune of around 2 crores, roughly 2 crores worth of business per year to start with, like, and maybe as and when we establish and settle, it will be much more.
So this 2 crore is very small considering 80 crore or 100 crore base for FY25 that we are guiding. So is this because of capacity constraints, and when we'll move to the bigger facility, it will move to maybe 10-20% of our business, or is the market only small and this is a decent enough business?
No, I'll explain you. Currently, this product is getting imported, so we have to slowly convert importers to getting used to the product what we are making. So the basic marketing time is what will take for us to establish this product in the market.
Okay. And sir, so in the next 3 to maybe by FY27 or 28, so can this become 10% of our revenue?
Yes, it can.
Okay. And sir, is there any the land acquisition that we are planning for a bigger facility? Has there been any material decision on that front?
Yeah, maybe very shortly we should be able to conclude the things. Maybe in 1 or 2 quarters we'll get to know more about it.
Okay. Thank you, sir. And just a final suggestion, sir, please do a buyback, because post 1st October it won't make any sense to do a buyback. So, yeah, that is the only suggestion we have from our side. So thank you so much and all the best.
Thank you, Madhur. We'll definitely look at this solution.
Yes, sir.
Thank you. A reminder to all the participants, please press star and 1 to ask a question. The next question is from the line of Jairaj Jain from PSC Capital. Please go ahead. Mr. Jain, your line is unmuted. Please proceed with your question.
Hello? Yes, Mr. Jain.
Am I audible?
Yes.
Okay. Thank you for the opportunities. So, sir, can you help me with the user industry by contribution to your revenue?
Okay. Should I give you the major industry segments?
Yes, sir.
Just give me a minute. Footwear contributes the largest, roughly 20%. Export contributed around 19%. Automotive around 14%. Orthopedic around 11%. Apparels around 8%. Defense around 6%. Home furnishings around 4.5%. These are the major industry segments.
Okay, great. So, sir, you have mentioned about the export, right? So I want to know, like, in which country we are currently serving, and do you have any plans to add in our portfolios?
Yes, we are currently serving USA, Germany, UK, Bangladesh, Turkey, Sri Lanka, etc. And we would be obviously adding more countries in Europe and also targeting South America.
Okay, great. So, sir, is China main trade for our business?
In terms of in exports, yes.
Okay. Then what are the strategies to overcome it?
Obviously, quality and better offering.
Okay. So, sir, somewhere down the line, if we are looking to collaborate for both manufacturing capacity and bringing under one roof, does the company have any progress on it?
Yeah, as I told you, in next 1 or 2 quarters, we'll get to know a little bit more about it.
Okay. And sir, how is this unorganized market and competition from it?
In hook and loop, basically, you have all categories like it's a triangle wherein the top part of the triangle is the premium segment wherein we are present. Middle segment is something wherein some other players are concerned. And there is a bottom segment which is a full volume driven segment, mass market consumption. So we are basically present in the top part of the pyramid. Like if I can give you example of soap industry, you have Lux, you have Hammam, and you have Lifebuoy. So in Lifebuoy segment, there would be many players. In Hammam segment, lesser players, and in Lux, even lesser players. So you can imagine a similar situation in our product.
Okay. Okay, great. So thank you, sir, for answering my questions.
Okay, Jairaj, thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Ganesh Nalawade for closing comments.
Thank you everyone for joining the conference call of Sky Industries Limited. If you have any queries, you can write us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference call.
Thank you, everybody.
Thank you.
Thank you.
Thank you. On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us. You may now disconnect your lines.